Now to the land of Oz, the Aussie stock market is racking up losses as the banks follow their U.S. counterparts lower, and traders bet GDP figures today will be unimpressive. Heidi is standing by with the details. Heidi.
Linda, I think there's a couple of jets flying behind me or something from Garden Island. I'd say it'd be one of the military aircraft. But that's the noise you can hear. Let's have a look at the market. It's certainly a two-pronged attack on the Aussie stock market today. The banks tumbling in reaction to the carnage among the US financials on Wall Street, and the market in general is being hit by weaker forecasts for GDP. Let's have a look at the banks first. And here's the big four. Red arrows across the board with the benchmark index down by about 1.7%. The resources stocks are getting hit as well. Yesterday we got the last piece of the puzzle as far as GDP indicators are concerned, and we saw a big blowout in the current account deficit, mostly due to lower exports of coal and iron ore in the second quarter. Now, falling exports has implications for GDP, and that sent economists scrambling to downgrade their GDP estimates. They've cut their GDP forecasts in half, from 0.6 to 0.3%, and some say we could get a negative number.
Essentially, it's flat. The positive GDP print that we got last quarter really was a statistical fluke, and we'll get a small positive or even a small negative number this time round. So even though there's obviously been a recovery here in terms of the growth as measured by GDP, it's still pretty flat.
The current account deficit widened as exports of coal and iron ore tumbled. Exports slumped 19% in the quarter, causing the deficit to blow out from an expected $10.7 billion gap to $13.3 billion yesterday. And I'll be back in about half an hour to break those GDP numbers. See you then.
Those supposed unimpressive numbers. Heidi, thank you so much for that.